now, right now. Right 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 now, right now. Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always happens, but it's been increasing over the last 50 years since it's been out there. The government has been bigger. Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about how Bitcoin broke bullish, and we're going to be looking at why it did that following the effective federal funds rate decision yesterday to move the United States effective federal funds rate from 5.15% all the way up to its current 5.4%. If you didn't see my video on that yesterday, I would highly encourage you to go back and watch that because I broke down the 3 big reasons that the Fed, believes that they need to continue hiking interest rates and the motivating factors behind why they believe that they need to go ahead and get all of those rate hikes out of the way right now. And to give you my prediction on how far further I think those Federal Reserve rate hikes are going to go. I think they have a very large bearing on the Bitcoin and cryptocurrency market right now. And interestingly enough, we actually saw a bullish breakout after that movement yesterday from 5.15% on the effective federal funds rate all the way up to 5.4. So today we're going to break down exactly what occurred on the Bitcoin market yesterday. Then we're going to do some planning about what we can do for the next couple of days and what movements may be coming up on Bitcoin. And I'll also be zooming out and showing you how you can plan to invest in the Bitcoin and the cryptocurrency market right now, because I don't want to get so tunnel vision on the day-to-day that we forget how you actually become wealthy in the cryptocurrency market. For 95% of you is investment. So we're going to be taking a look at both of those things today. Thank you so very much for tuning in. Especially thank you if you watched yesterday's video. That video got over 11,000 views. So thank you for going and watching that. If you haven't already, you can see it right here. The Federal Reserve just moved the Bitcoin market. Make sure to go back and check that out. Let's go ahead and read some chat. Crypto Surge was first in chat today. Said first. Crypto Mini Bike was second. Said good morning, everyone. Crypto Mini Bike, I just read your message over in Club DeFi's Discord server. Very sorry to hear that, my friend. Fino is in chat. Joe Bollier is in chat. Grand Roofing Incorporated is in chat. Robert Kehoe is in chat. Crypto Surge said, hope all is well at Crypto Jeb. Community, love you guys. Loving our community, guys. I'm loving what we're doing here. Very excited for the future of what we've got going on, especially, again, as I said, some of the things going on behind the scenes. Beer, bourbon, barbecue, and something I won't say because I'm a Christian said, let's go. Howdy, how are you doing? Crypto Mini Bike said, let me tell you something. He was singing the song. I do like that song. You know, that has been our anthem for like, gosh, what's it been? Almost 4 years now? It's probably been 3.5 years. The Real Good Feeling has been our anthem. Much love, much West Michigan love. It's me, Eric Browning. Love you, Jeb. Good to see you, Eric Browning. Someone said, yes, the bull run will continue. Inflation is cooling in Canada and it will cool in the U.S. That's all we need. Yes, inflation is going to cool to some degree. It is going to continue to be a factor for a while because, as I mentioned in that video yesterday, right now the United States is undergoing one of the largest industrialization movements that it has witnessed in nearly a century. I mean, we're talking about the scale of industrialization on a percentage basis that we saw in the immediate post-war environment of the end of the 40s, and also what we saw following the collapse of the Iron Curtain. There is a huge amount of industrialization going on right now. Phil the Flying Frenchman in chat said, good morning. You still, hands down, have one of the greatest names of all of our viewers, and that's not to knock any of you other guys that and gals that have that are in chat that have awesome names, but that one takes the cake. Thanks, Jeb. He is at peace now. I'm sorry to hear that. I'm sorry to hear for your loss, but yeah, but I'm encouraged to hear that he's at peace, like you said. Christian Rosso said, hit the like. Faisal Salim said, hit the like. Hit the like, guys. Thank you guys so very much. Let's go ahead and jump straight on over to CoinMarketCap. As you can see, Bitcoin right now is trading at $29,474, kind of jumping around quite a bit. We're going to talk about that volatility here in a minute because it is relevant. It's up 0.53% over the last 24 hours, down 1.68% over the last 7 days, up 6.5% over the last 90 days, up 77.26% year to date. Ethereum has also rallied slightly over the last 24 hours. It's up nearly 1%, trading at just shy of $1,900. Bitcoin at $571 billion in market cap. Ethereum at $225 billion in market capitalization. Okay, pretty exciting stuff. If we take a look at the Bitcoin dominance here, we're also going to see that Bitcoin is performing very, very well. We can see here that Bitcoin has gone through a major run over the last several months, up to 50% in market dominance, and then it has gone through a correction down to 48.37% and is currently sitting around 48.5%. That high market dominance does indicate to me that a bull market may be en route, I suppose. It's en, not on. Bitcoin and Ethereum are performing quite well, and in fact, some of the other altcoins that have come under fire from the SEC are also performing relatively well. If you come here on CoinMarketCap, there is a category, not sure exactly where it is, but it is SEC alleged securities alleged by the SEC. I'd have to find it, but SEC security tokens that have been alleged. You can see every single one of those cryptocurrencies right now, except for AMP and a couple of others way down the list in the like 400s, are actually doing quite well. You can see this entire portion of the market definitely took a nosedive in market capitalization about a month ago, a little over a month ago, about 2 months ago. But over the last 24 hours, they're actually doing pretty well. BNB's up 1.29%, Cardano's up 2%, Solana's up 4%, Tron's up 1%, Polygon's up 1.66%, Cosmos up 1.5%, Filecoin up 2%, ICP up 1.3%, Near up 2.5%. So the altcoins here are doing relatively well, and that is definitely encouraging. Let's take a look at the Bitcoin market. As you guys can see, there were a couple of trades yesterday that we talked about, and one of them actually came true almost perfectly. So let's analyze those predictions that we made yesterday. But first, let's remind ourselves the strategy, the methodology that we take when we are making a trade or an investment in any market. This applies to trading Bitcoin, investing in Bitcoin, trading Ethereum, investing in Ethereum, trading, and is normally called flipping. In this case, flipping a rental property or a home, buying a property and turning it into a rental investment, buying a stock, trading a stock, investing in a stock, investing in an angel startup, whatever it is that you're investing in. There are 3 steps that you take to make that investment. And then you can give as much detail as you want to each one of those 3 steps. You can give it 5 minutes, you can give it 5 months, but you go through 3 steps. The first step is you perceive what is happening in this market. You need to understand not only what is happening in this market, but you also need to understand how to understand what's happening in this market. Let me give you a tried and true example that people sometimes make fun of me for, but hey, look, this is one of the best examples I can give you. Not only, if you're trying to figure out whether a hurricane is going to hit you, do you need to perceive whether there's a hurricane in the Atlantic Ocean, you also need to perceive a little bit about how meteorology works so that you can say, okay, well, the hurricane will hit this water current and it'll get pushed north. All right, it'll hit this pocket of warm water and it'll grow bigger. It will, the prevailing winds will push it in a certain direction. Whatever it may be, you need to perceive the situation on the ground, and you need to have some kind of educated understanding of how to perceive that situation with knowledge. And that's where an understanding of technical analysis comes in and why it's so important. You need to perceive what's going on in the cryptocurrency space, and to do so, you need those 2 things. First and foremost, you need to look at what's happening right now and what's happened in recent history, and even maybe in long-term history if you're doing historical analysis. That's all part of perceiving what the market is doing right now. Perception, same thing, where the market is now. You also need to have an understanding of how to perceive the market, and that's where your education comes in. That's where I come in to help teach you technical analysis, trading, investing, and financial sovereignty. Those are the 4 big categories that we like to talk in. And so if you perceive the market, then you will perceive that over the last couple of days, Bitcoin has been moving up relatively aggressively. And in fact, it went ahead and went through our bullish plan. Now, if you'll remember to the 3 Ps, the first thing we do is we perceive, the second thing we do is we predict, and the third thing we do is plan. We don't really worry too much about whether our predictions come true or not, because that's not the point. The point of us doing technical analysis is not to be able to say, it's going there, and I'm going to look real cool when it goes exactly where I said it would. That is not the point of technical analysis. The point of technical analysis is to inform a trade or an investment. Full stop. Full stop. That is the point of technical analysis. If it were not for the point of making a trade, in my case, because I'm primarily an investor at this point, for making an investment, then full stop, you're not doing it. You're not doing technical analysis for any other reason other than maybe entertainment. And some of you guys might be here for entertainment. That's totally fine. I find this stuff to be pretty entertaining, and I am entertained by making price predictions. But the point is the plan and the execution, not the prediction. I hope that's clear. We have a core value. It's called be prepared, and I say something like this too. We be prepared by planning for every possible outcome so that we can be prepared to make profitable products. That's what we want to do. We want to be prepared. For any of you guys that are in the Scouts, I never had the luxury, I guess, of being in the Scouts, but it's their motto, you know, be prepared, be prepared. You've heard the song, be prepared, have a plan. That's what we're trying to do here. We're trying to come up with a plan so that we can make profit. Plan so that you can predictably produce profit, right? Okay, so those are our 3 steps: perceive, predict, and plan. And honestly, sometimes you can skip the prediction and you can go straight onto the plan because you plan for both options. So our prediction here was that Bitcoin would drop to the downside with a 65% likelihood and move up with a 35% likelihood. We changed this from a 70-30 split to a 65-35 split because on Coffee and Crypto yesterday, and I'd like to do my technical analysis live so you guys can see my methodology. On Coffee and Crypto yesterday, we were sitting right here, and I moved this from a 70-30 split to a 65-35 split, and I was starting to become more bullish because of 3 things. I was starting to become more bullish because of these 3 candlesticks right here, and because of that wick and that wick, showing me that the bulls were kind of prodding, if you will. The bulls were able to make up in 1 or 2 candlestick, 1 or 2 hours, what the bears were taking 8 to 12 hours to do, and so that gave me more of an inclination. All right, I think we're moving bullish, but I need to see a breakout to see confirmation. If we move forward just a few hours, we start to see just that. And by this point, I would have said, all right, I'm mostly bullish just about 6 to 7 hours after the live stream yesterday. Now, with our plans, we had a plan for a short trade and we had a plan for a long trade. One of them actually came true. And so we can analyze how that theoretical trade did. So, as you can see, I gave you 2 levels of support and resistance to play with. These are what we called ceilings. Right now, one of them is acting as a floor. Levels of support and resistance are flat levels that you can kind of think about like this. If Superman's battling whoever he fights against, I haven't watched Superman in a long time, but he just gets thrown straight into a skyscraper, and he's going to go thud, 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 and eventually he's going to hit a floor, and his kinetic energy is going to be less than the structural integrity of that floor, and he's going to stop, and he might have fallen through 5 of them, or he might be doing this whole number, and he's going to punch straight through the ceiling, but eventually he might run out of kinetic energy, and the structural integrity of that ceiling above him is going to be stronger than the amount of energy he has, and so he's going to stop. And so it works the same way in cryptocurrency and on charts. There are different levels of support and resistance, and depending on what level you're on, it's a floor or a ceiling. Think about it like this. If you're in a building and it's 2 stories, the ceiling for you is the floor for somebody else. It's not really a ceiling or a floor, it's both. It is a flooring. There you go. If you have the same mentality on Bitcoin, then every level is a floor or ceiling. And typically speaking, if you find those floors and ceilings, then you're going to see that the market kind of bounces around between them. And so we found the 2 above us. We found the first ceiling above us and then the second ceiling above us. We broke through the ceiling at 29.4 and rallied all the way up to 29.7. And so when we made our prediction, the market was, when I showed you the plan for if the market moved bullish, and again, the prediction, the percentage doesn't really matter all that much. It's fun. It's kind of enjoyable, but ultimately we had a plan for the less likely outcome, even though it was the less likely outcome, and so we had a plan for how we could have profited with this. So let's just kind of break it down first. We had our level of resistance here at 29.4. That was our previous level that we had set on the 23rd of July. That was this past Tuesday. And so, excuse me, I'm sorry, the 25th of July is 2023. Set this level as a ceiling. The next level as a ceiling was 29.7. That's a level that we've tested multiple times. So we said, let's put an entry price right above the ceiling, our stop loss right below the ceiling, and our next exit right below the next ceiling. So if we move forward, we can see something happen that can happen quite a bit. We initially moved into this trade, and then we moved right back out of it. And so you would have gotten stopped out one time using this trade. But let's just break down what would have happened even if you did get stopped out using this trade, and then you went ahead and used the trade again anyway. So if you enter this trade, then you would have, if you're following our principles of technical analysis, you would have been having a trailing stop loss that was relatively tight. What do I mean by that? Well, the trailing stop loss is never going to be smaller than your initial stop loss. The initial stop loss was 0.12%. As you can see, the target was 0.85%. With the trailing stop loss that you would have set up here, you actually would have profited on this candle wick right here, because as you can see, you would have had a trailing stop loss of no more than 0.12% to the downside, and the market had to drop 0.25% to the downside. So if you had that trailing stop loss, you actually would have gained 0.13% based on our principles of trading with this wick. You might think, oh man, this wick came up and then it got stopped out. You wouldn't have made any money. You actually would have made, following our principles of trading, 0.13% on this trade, and then you would have reset the trade and put it right back, and then you would have made the trade again. You would not have been, again, following our principles of trading, you would not have been in the trade during this wick. You would have been stopped out, and you would have been safe from that movement. After you went through that trade and Bitcoin was back below 29.4, especially when it was putting this green candlestick right here into motion, then you would have said, okay, I'm going to use the exact same trade setup because the levels of support and resistance are identical. We just put a major break through it. We've got a lot of reasons to believe we're bullish on the oscillators. MACD is bullish. RSI is bullish, pushing up above 70. Everything is peachy keen right now, looking for a breakout. We've actually also seen that there's a buy signal on Lux Algo, not confirmed yet, but it is there. So that all gives us confidence that maybe Bitcoin's going to break above 29.4 once again. And so then, having already made 0.13% on the trade that we showed you yesterday, you would have continued in the exact same trade, and you would have entered the trade here, and you would have exited the trade right here. Notice the level of resistance is at 29.7. But again, one of our principles of trading and technical analysis, this is actually a principle of trading, is that we put the exit a little bit below the next ceiling. The next ceiling was at 29.7. Yesterday, we decided to go ahead and put our target right here. If we click on it, as you can see, at 29,679. So you would have gotten in here, and you would have gotten out there, and you would have made the full trade, and you would have gone ahead and made 0.86%. 0.86% plus 0.13% is 0.99%. If you put $100,000 on that, you, my friend, would have made $990 yesterday based on that trade. If you use leverage, which you can do, but please be very careful with it because it is a form of debt. And as you know from the Bible, the borrower is slave to the lender, and that is a form of debt. So if you're going to use it responsibly. It's not sin, but use it responsibly, please. And responsibly probably means however much you're using it, you should use a little bit less of it and build it with principle, not with debt. That's the much better way to do things. But if you were using, say, 5x leverage instead of making 0.99%, you would have had 5 times the risk. So keep this in mind, but you could have made 4.95% based on that trade setup that we did yesterday. And remember, my prediction was wrong. I predicted with a 65% likelihood that we would break to the downside, 35% likelihood we break to the upside. And guess what? Because we didn't skip the planning phase and we had a plan for when we did the opposite of what we initially thought was going to happen, when we had our hedge plan, if you will, then we ended up making not one, but 2 profitable trades. And we ended up using the principles of technical analysis, and we would have made money on both of them. In a day, you would have made 1% if you had to use this trade that I gave you for free yesterday here on Coffee and Crypto. So I'm not sitting here to brag. What I am telling you is that there are principles that you can follow for trading, and there are principles that you can follow for technical analysis that will bring you profit. It's the 3 Ps in action. Number 1, perceive. What's going on in the market? Well, right now we see that the Bitcoin market is probably about to go through a lot of volatility. Why? Because there is an effective federal funds rate decision. Some of you guys said that the market moved sideways through it. It did not. The decision was made here at 1400 hours. We ended up breaking through. That was your first trade that, again, remember, would have been profitable. We broke through again at 1600 hours. Again, remember, that would have been profitable. Both of those trades, you would have been in for less than an hour. So you got to be quick with these things and make sure you have a trailing stop loss set up. And we were able to perceive that there was probably going to be a movement coming. Yesterday's stream title was, let me just go ahead and pull this up so I can show you. Again, this is all found in the perception phase. I am not smarter than you. I am more experienced, maybe not, but I'm not smarter than you. I just know some principles and I follow them. I said Bitcoin will move massively in exactly 4 hours. And exactly 4 hours later, Bitcoin moved, and you can maybe argue whether massively is true or not, but Bitcoin moved quite a bit compared to the range that it had been in, moved by 0.8%. And then it would go on to move just a couple of hours later, another 1%. So the movement happened because we were able to perceive that the effective federal funds rate decision was going to have bearing on the market, and it was probably going to move the market one direction, maybe not the direction that we thought, but it was going to move the market one way or another, probably. We ended up moving to the upside, and because we had a prediction, we were able to ascertain how much work we should put into both of our plans, put a little bit more work into our short trade. Didn't end up happening. That's fine, because we still, in the planning phase, had a plan for if the market moved to the upside, and that plan ended up having 2, not 1, 2 profitable executions if you followed it to the T using the principles of trading. So, takeaways here. Number 1, follow principles. someone said in chat yesterday, the mark of intelligence or the mark of wisdom or whatever they said is being able to take something that's complicated and simplify it. Let me just simplify something for you very, 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 very simply. Get the right principles, repeat them over and over and over and over and over again, and do not compromise them, and follow a plan. The plan that I like to share with you guys is perceive what's happening in the market, predict where you think the market is going to go. Sorry, my southern drawl came out there a little bit. And then make a plan for how you're going to capitalize on both of those movements. It's ridiculously simple. It does not have to be complicated. My friends, it is not all about the predictions. And if you get caught up in trying to say, am I predicting right more than I'm predicting wrong? Bah humbug. I don't care if you do or not. Because that's not what makes money in trading. What makes money in trading is not how accurate you are. You could be wrong 80% of the time, but your planning is on point, and you follow the plans and you follow the principles, and you will be profitable if you do that, even if you're wrong 80% of the time on which direction you think the market is going to go. Who cares in the realm of trading? In the realm of investment, yes, it is more important that your predictions are true because your predictions have bearing on whether or not the asset will exist in a certain amount of time. It has bearing on whether or not the market is going to be mass adopted. It has bearing on whether or not the market is going to come under some kind of massive regulatory attack that'll lead through a giant crash. Those things are much more important to the investing side of things. On the trading side of things, it doesn't really matter all that much what your prediction is and whether it comes true or not. So, I do want to talk about the investment side of things, though, because I don't want a tunnel vision on the trading side of things, because just being totally honest with you guys, that's not where the majority of my attention is. The majority of my attention is on the personal finance, on the investment, and on the business side of things. So, let's talk a little bit about that as well. Drop a 1 in chat if you find the 3 Ps helpful. In fact, I'm going to run a poll really quickly. Do you find the 3 Ps helpful? Just curious. I just want to see if you guys are, I just want to see if that's something that's helpful for you guys. If you guys are enjoying today's video, make sure to hit that like button, subscribe to the channel, and also make sure to sign up for Lux Algo, because Lux Algo gave us some incredible predictions yesterday. Thank you guys so very much. All right, let's talk about the investment side of things. Again, we're going to run through the exact same process, and it's going to seem boring. You're going to say, oh my gosh, Jeb, I'm so tired of hearing these 3 Ps. Goodness, man, you've got to get some new material. Why? Why? It works. It's that simple. No. We follow principles, and it's not always exciting, but you know what is exciting? The results that come from it. This is work. And if it's enjoyable, great, but this is work. We are working to figure out what the market is going to do, and we're going to make a plan for both. Capiche? Cool. All right. Sometimes people complain like, oh man, this is boring. Oh man, this is entertaining. I want this to be entertaining for you. I find this entertaining. But bottom line, why are you here? You are here, and forgive me for putting words in your mouth. I've run polls on this on the stream before, and I've gotten over 95% saying yes to this. You are here to make a radical difference in your financial life so that you can be radically generous, radically enjoy your money, radically invested, and radically change your family and your family tree and where you think and where your family is going to go. You are here to change the connotation of your last name when it gets brought up. You are here to not be a slave to your finances, because many Americans are, but instead to be in control of your finances and to have subdued them, to have brought them into bondage so that you can use them with meekness. Cannot forget that. That's very important. For what? The betterment of others primarily, but also steward them well in the realms of enjoying them and investing them. That's why you're here. You're here because you want a radical change in your finances. And that, my friends, is what I am here to preach and to teach and to share. So let's go ahead and talk about the 3 Ps on the realm of the investment side of things for Bitcoin. Let's first perceive what's going on in the Bitcoin market. First and foremost, since we're looking at this from a long-term scale, let's just remember what Bitcoin is. Bitcoin is a limited availability, scarce digital asset which maintains its value into the future. There are plenty of people that believe that Bitcoin is going to take over as the world reserve currency, that it's going to become the backing of global currencies. That is something that is possible to happen on a limited scale. I doubt that Bitcoin is going to end up lubricating $100 trillion market all on its own. So Bitcoin probably will not ever be worth $100 trillion. It will probably never replace the dollar. Oh my gosh, did Jeb just say that? Yes, I did, because it's reasonable. You think about the dollar and the amount of liquidity that it has to lubricate the global economy. And Bitcoin is going to be very hard pressed to replicate that. The amount of financial systems that the global economy and the members thereof utilize that the United States dollar allows for, Bitcoin is almost certainly never going to be able to replicate every single one of those. And I know about 20% of crypto will say, bah humbug, you're out of here, you're kicked out of the club. That's okay, because I'm going to stand for what I believe is right. And I don't want to tell you something that I think is wrong just because it's popular, even if it gets me more views or more money. I'm not interested in that. I'm interested in sticking by principles like being a righteous and integral individual, and I don't believe it's ever going to happen. That being said, I do think that there's a reason that gold is worth $10 to $15 trillion in market capitalization. I do believe there's a reason that Bitcoin has been worth $2 to $3 trillion in market capitalization before, and I do believe there's value in a scarce digital asset, especially the very first creation of a scarce digital asset, which Bitcoin is. And what I mean by that, very simply, is that Bitcoin is the very first iterance of a scarce asset that exists entirely online, that exists entirely digitally. This has been done somewhat with gold. Gold exists in a bunch of vaults in a few different key cities around the world, and then is digitized because the ownership certificates of it gets passed around from hand to hand through ETFs and sometimes even derivatives, but typically in ETFs and ownership certificates and different ways of analyzing who owns the gold. So the gold sits in one place, but the ownership jumps around. And so you, in that way, sort of digitize gold. Bitcoin is the first example of a truly scarce, because gold is not a truly scarce resource. It is the first example of a truly scarce resource, commodity, whatever it is you want to call it, to exist purely online. Those are the two separating factors for Bitcoin. Well, there's a few more, but those are the two biggest ones in my mind, and everything else kind of supports those. The decentralization, the unhackability, all of those are in support of this purpose. Bitcoin is the first superconducting, thermodynamically sound cryptocurrency creation of any kind in the history of mankind. That's a realization I came to on my now very famous interview with Michael Saylor. That video's got about 90,000, 70, 80, 90,000 views on the channel. Go back and watch that. And he and I both are students of science. MicroStrategy, if you don't know, is actually an engineering firm that works a lot in patents. And so I have a background in engineering and astrophysics, not a professional background, just a hobbyist. I studied it a lot. I was so interested in it. I would just study it for like 6-7 hours a day, every single day. I loved it. And so I'm very interested in that. And we were both able to think about it like this. Bitcoin is the first superconducting, I'll explain what this means, is the first superconducting, thermodynamically sound creation to exist online in the history of humankind. Let me break that down for you. Superconducting means that you can send Bitcoin anywhere with basically zero barrier. If you're trying to build this CERN super collider, if you're trying to build a global network, a national or a regional network of very low loss energy transmission, then you try to find something called a superconductor. Room temperature superconductors have not been invented yet, and they probably won't be for a very long time. But if you chill something through the use of liquid nitrogen, liquid helium, not liquid oxygen, but through liquid nitrogen, liquid helium, then you can create something called a superconductor if it's about 274 degrees below centigrade, below zero on Celsius. Somewhere in that range. Very close to near zero. If it's extremely cold, you can transmit electricity. I'm going to turn this back into Bitcoin. Believe me. I know you might think, oh, Jeb, you're way out there right now. You're on Saturn. I don't know where you went. I'm coming back. Believe me. If you have a superconductor that's very cold, you can transmit electricity through that, electrons through that, other fundamental particles of the universe through that with almost no resistance. Resistance is measured in ohms. You bring the ohms down to near zero. And so theoretically, if you had a long enough superconductor, you could transmit 100 kilowatts of energy and you'd have 99.9% of it 1,000 miles from here because the superconductor is lossless or just about lossless. Right now, you try and transmit electricity from one side of the country to the other side of the country, you're going to lose half of that electricity along the way. Similarly, in currencies, if you're trying to transmit currency from the New York from New York, and you're trying to send that and change that into, I don't know, bolivars, and you're trying to send that to another country, then you've got so many different areas, so many different types of barriers that take away some of those funds. First of all, the currency transaction cost. That costs money. Second of all, you've also got the issues of cross-border payments. There are different taxes and tariffs and all kinds of resistance factors that take away some of the money. Oftentimes, if you're trying to remit, is the technical term, if you're trying to remit currency cross-border in cross-border transactions, you can lose between 10 to 30% of the value of the transmission in just transaction costs. Similarly, that if you're trying to send electricity across the country, excuse me, and there is electrical resistance in the cable that you're using. Now, in the real world, you have superconductors. We are trying to build room-stable superconductors so we can have superconductors in the telephone lines, and then we can increase the efficiency of the electrical grid by depending on what prediction you use, by 25 to 500%. We've already done it in currency, and it's called Bitcoin. In Bitcoin, you can send currency from New York to Venezuela to Tokyo to Long Beach, and you will lose virtually none of the value. Why? Because the transaction fees are a flat fee based on how much room the transaction takes up inside of the block. It has absolutely nothing to do with the size of the transaction. All transactions in that realm of cross-border remittance and payments take a percentage of the transaction. For Bitcoin, it is based on the amount of size that it takes up in the block. And so that means the cost might be much higher for a $5 transaction, but if you're trying to send $100 million and you have to spend $30 on that transaction, that's a lot better than spending $10 million on the fee or $1 million on the fee. You'd rather spend the $50. And so we've seen this arising of individuals with high net worth using Bitcoin for large transactions, for things like large art purchases, for large real estate purchases, for large land development you've heard of Russia using it to transact in their oil trade for we're talking tens or hundreds of millions of dollars of trade. So Bitcoin is arising as a gateway to get around that system that has a lot of resistance, and so it works very well for the average individual in low GDP, low GDP per capita, low earning countries that are trying to send money cross borders to family that's in two different nations. And it's also arising as a go-to destination for transactions that use huge amounts of currency. Right there in the middle, where we live here in the middle class in the United States, where we're making, $50,000 to $150,000 a year, where those individuals are, it might not be adopted that quickly in that range because the US dollar is more efficient in that context inside the country. But if you're trying to do cross-border transactions, or you're trying to do a very large transaction that is going to take 7 days and 3 to 5% of the transaction cost, if you can do it in an hour with Bitcoin and you can do it for $50 on $1 million, then you're going to take Bitcoin as your currency, even if you have to factor in the cost of transacting from your fiat currency into Bitcoin. So that is the superconducting element of when I say it's a superconducting, thermodynamically sound digital asset. It's a superconductor online for monetary value, in the same way that superconductors in the real world are conductors of electrical impulse, of electrical energy. The thermodynamically sound component of that means this. If you think about a water tower, and I believe this is the exact same analogy that Michael Saylor and I used on our interview. If you think about a water tower, and it's got a leak in the bottom, eventually that water tower is going to drain. Eventually you're going to lose the value in that water tower. And so we've come accustomed to a 2% per year drainage of the value of the United States dollar. And the idea is that it just continues at 2%, and eventually it just drains and drains and drains. You, my friend, are subject to that inflation of the United States dollar, that 2% inflation. Now, to a certain degree, to have a global currency like the United States dollar that is large enough to allow for as much trade as possible, it's difficult to do that with an asset-based currency because you can't change the amount of currency in proportion to the growth of the economy. There's just not enough gold in the world to do that. So in that context, fiat kind of makes sense. But one of the major downsides of that is that you do lose 2% every single year. And so what you can do about that is by putting a portion of your value into something that is what we call thermodynamically sound. Something that is thermodynamically sound works like this. Think about a thermos. Have you ever bought a thermos and it says that it will keep something hot for 4 hours and it'll keep something cold for 20 hours or whatever? That is a rating of how thermodynamically sound that is, how good it is at keeping the energy that is inside of that container inside of that container. The United States has a thermodynamically sound rating of 2% per year. It loses 2% of its value every single year to inflation. Bitcoin does not do that. Bitcoin is thermodynamically sound in that the amount of inflation that takes place because of the change in the amount of the currency is a fixed quantity and is decreasing all the time. The current amount of Bitcoin in circulation is, as we can see over here on CoinMarketCap, 19.4 million. We've got 1.56 million to go over the next 117 years. And to be honest with you, we're probably losing more Bitcoin every single year right now than we're creating. So Bitcoin has achieved, at least theoretically, we can't know this for sure, but theoretically it's achieved a state of total thermodynamic soundness, where it does not release its energy through the form of radiation. It does not radiate its energy away into the ether the same way that the inflation of the United States dollar does. You lose 2% inflation in the United States dollar to the creation of more dollars into the growth of the global economy. That doesn't happen in Bitcoin. So I'm not saying that Bitcoin should replace currencies because I don't think it's got the capability of being able to lubricate the entire market the way that many people think that it might. The United States dollar and the currency system that we operate with is a very complicated system, and it is also a system, by the way, that is designed to take your money. So I'm not saying I morally all the time agree with it. What I am saying is that it is a lot larger and a lot more difficult to topple than some people in the cryptocurrency market give it credit for. That being said, Bitcoin still has a very important role in being a hedge against the bad sides of that system. Some of the bad sides of that system is that it is very difficult to transact cross-border, and it costs a lot of money to transact large transactions. Bitcoin solves that, and it also does a phenomenal job of allowing for individuals to keep their value rather than giving it away to inflation. It helps with transactions. That's the superconducting element, and it helps to store value, which is the thermodynamic soundness element. And those two components are what at its very core, give Bitcoin its value. It's not the decentralization at its core that gives Bitcoin its value. It's not the nigh unhackability at its core that gives Bitcoin its value. Those things are important and they are revolutionary, but they back up the value in the fact that it is thermodynamically sound and it is superconducting. Thank you very much. Maybe I should clip that and put that as a rant. Let's go ahead and talk a little bit more then about the actual investment of Bitcoin and how it's going to move in the future now that we have worked through the perception stage of what Bitcoin is. Let's also perceive a little bit where Bitcoin is. Bitcoin is a year from the halving event. That's likely going to be very bullish. It's probably going to move in, I don't know, maybe that direction. We are sitting right here between, below, in betwixt, quite a few levels of resistance. You can see it kind of looks like, I don't know, the intro to any show on Netflix right now with all the different colors. But this right here is a major zone that we need to break through. It's between 28,545 and 31,500. So if you're an investor, here's what I look at. First and foremost, there are two possible outcomes. And this is where we start moving to the prediction phase. Bitcoin can move up or Bitcoin can move down. Wow, Jeb, revolutionary. Here's the deal. Trading and investing does not need to be complicated. When you hear me say something, you say, gee willikers, Batman, I could have figured that one out myself. That's my point. Yes, you can figure this out yourself. You are smart enough to figure this out. Not one of you is too dumb to figure this out. Every single one of you has the capability to figure out how to profitably invest in Bitcoin. Trading's a little bit more complicated. Every one of you has what it takes, and every one of you has what it takes to figure out how to trade, but every one of you has what it takes to figure out how to invest properly in Bitcoin and in the stocks and in real estate and all of that. I have total confidence in you. I have total faith and confidence in you. Total. There's not a shadow of a doubt in my mind that, barring some just absolutely massive mental or physical incapacity, that every single one of you can figure this out. I'm talking 99.5% of people out there can figure this out that are, 18, have a bank account, and have a little bit of money. You can figure it out. You can do it. And if you don't have those things, you can get those things as well. Those are acquirable by somebody with, a basic amount of health. So when we look at Bitcoin and we look at the prediction phase, my prediction is that I give it a 70 to 80% likelihood that Bitcoin is going to be significantly higher, and we'll talk about how much higher, in a year and a half than it is right now. And again, remember the definition of an investment. Investments are trades that you take, that you hold for over a year at bare minimum. If you are holding something for 6 months, if you buy a 6-month treasury, that is not an investment. That is a savings account that you decided you were going to go and capitalize the 5% on. And you know what? Fair enough to you. They're really profitable right now. If you're going to have savings, might as well put some of them in treasuries because they're yielding like 4.5%. Not a bad option. You can go check it out. It's something that you can do directly with the treasury. And it is a way that you can make some money. Now, the thing to keep in mind about that is that you are taking place in a debt system, but in that situation, you're actually the lender, not the borrower. And as we know from the Bible, the borrower is slave to the lender. The borrower is slave to the lender. The United States government is borrowing from you. So if you want to be able to say that you've ever brought the United States government into bondage and you've been the master of the United States government, go buy some treasuries, because you, my friend, are actually the lender in that case, and you are the one that's being paid interest based on the effective federal funds rate and the credit and debt market. So don't have as much against being on that side of the transaction. So it might not be a bad place to put some treasury, to put some savings. It's not an investment. Don't try and invest with treasuries. That's not an investment. It's just don't do it. It's not an investment. You can get better returns elsewhere. But if you've got $40,000 in emergency funds sitting on the sidelines and you're like, I don't think I'm going to need them anytime soon, then you might, if you need them, then you take a small penalty for pulling them out, and then boom, you're making 4%. Why not? 4% on 40 grand a year if you do it for 6 months. Let's do some quick math. 40,000 $1,600. $1,600 divided by 2. You make $800 in 6 months at a 4% return on $40,000. You might end up wanting to make the $800 in 6 months. That's $120 a month. You can go make $120 a month right now. You can check my math if you want. By putting 40 grand into a 6 month treasury at 4% return, you make $800 in those 6 months. That's $120 a month. That is the amount of money that you could actually use in your budgeting. You could say, hey, man, we could do $100 a month more right here because we want to keep our savings at its current level. Side note. Anyway, getting back to it on Bitcoin. Over the next 1.5 to 2 years, and this is where we're talking about investment, I think Bitcoin is going to be substantially higher than where it is right now. 1 to 2 years out, I think Bitcoin will probably be close to or back at all-time high. Now, let's keep in mind, Bitcoin rallied all the way to $3 trillion last time. Bitcoin's probably going to go to $10 to $20 trillion at some point in the future, probably in the next 10 to 20 years. So $3 trillion, I think, is absolutely acquirable. For Bitcoin to get back to $3 trillion, it's going to need to, first of all, have the halving take place. And second of all, it's going to need to break through this zone. If it does both of those things, good. So that's where our predictions come in. What do we want to invest in? Right now, we want to invest in Bitcoin, but we want to know whether right now is the time or not. Here's the deal. Bitcoin is at a decision point, a very critical one. It's either going to crash and it's going to crash hard and then it's going to rally, or it's going to break through and it's going to rally now. It's going to do one of these two things. It's probably not going to just sit up here and trade sideways for 8 months. It's probably going to do one of these things within the next 3 years. Within the next 3 months. And so we want to make sure that we're ready for both options. It's going to go up. It's going to go down. If it goes up, this is probably how it'll do it. If it goes down, it'll probably do something like this. All right. Predictions. I think within 3 months, we'll be trading above $31,000 with about a 70% likelihood. Again, let me say that again. Within 3 months, 70% likelihood we're trading confidently above $31,750, $31,500. Maybe 4 months. Let's call it 4 months. Because I want to give it time, because Bitcoin does sometimes move a little bit slower than I predict, so I want to kind of slowly adjust what I end up saying. I give it a 30% chance that Bitcoin will be below 28,545, which is the bottom of that range, in 4 months. And it will probably bottom out somewhere down around $20,000 if it does drop down there. So here are our plans, and they're going to look pretty simple because for 2 reasons. Number one, they're investments, so you have a little bit more room to fiddle around with your numbers. You don't have to be as razor tight in getting the entries and exits and stop losses down to the penny. But the second reason is because they take longer, and it's a little bit like trying to make sure that the sloth that is moving in the right direction rather than the cheetah. If the cheetah is moving in the wrong direction, then the cheetah is going to end up being way off track in like 5 seconds. The sloth moves a little bit in the wrong direction. 5 seconds later, it's like, okay, did you even move? Did you take a step? Like, is this Zootopia and you work at the DMV? You didn't even move, like, right? So an investment's kind of like that. If it's a little bit off, you've got time to adjust. It's not like you have to be like, no, come back, you're going the wrong way. It's you have some time. So with our investment here, if we break above 31.5, I would put an entry for a investment. And again, an investment is just a glorified trade that you keep for longer. I would put an investment entry around 32.5. If we start hitting up towards 32.5, I am pretty confident that Bitcoin is moving into what we call the pre-halving phase of the bull market. Exit, I don't really care about, because we're going to hold it for so long that we don't have enough context right now to figure out where that exit ought to be. And this is where investment is a little bit different than trading, and it's also where it's a little bit easier. If you're getting into crypto, start out as an investor, then work your way into being a trader if that's what you so choose to do. Don't do trading first, do investment first. You heard me right. People are not going to like that, but it's true. It's the best movement. Try to learn to invest first and then try to learn to trade, because investments are easier trades. That's all they are. And you also don't have to worry too much about stop losses and exits. You mainly just worry about the entries, and then you play it by ear. But again, if we don't plan at all, then we plan to fail. So we want to have some kind of plan. An exit up here, I would probably put at least above $50,000. I think Bitcoin is definitely going to go that far in the next 2 years. If it doesn't hit that far, then we're starting to have to wonder, oh, why didn't Bitcoin go to $50,000 in the next 2 years? Stop loss, I would give a stop loss of around 27.5, but keep in mind that you don't have to get out of these investments in the first place. It's normally not the best idea to try and play with stop losses on investments, because if you're investing in something, it means you believe in it. That being said, we want to be prepared for both scenarios. So a stop loss of about 15% in this case does, and that gives us about a 4x risk to reward ratio. Now, if Bitcoin breaks down here, then you're going to end up needing information that we don't yet have. We don't know where Bitcoin would fall to if it did. Maybe $20,000, that's a level we could talk about. Maybe $25,000, that's a level we could talk about. Your best bet would be to enter as we break through these levels, and then enter again as we break through these levels. Or if we bounce confidently and you think we're not going back there, then to enter then. Basically, the principle to go by here is that you enter after you've moved beyond a certain level, whether that be that you moved beyond a certain level by breaking below it, or you move beyond a certain level by bouncing and holding above it. Whatever happens, whether you move beyond a level and you confirm that you're moving beyond the level, then that's where you do the entry. Again, right here, for example. And then, simply put, you would use a relatively large stop loss, because we're talking about investments here, and then hold it for a year or two and see where it goes. Again, not as complicated. You still follow the same process, the 3 Ps. You perceive what's going on in the market. What is this market? Where's the market been? Where's the market going? What are the big impacting events that are going to take place in the next 12 to 24 months? Then you predict what's the likelihood that's going to do X, Y, or Z. Then you set a plan to all 3 of those things. If it trades sideways, naturally, there's almost no plan there because you're not going to make money on the market trading sideways. But if the market moves up or down, then those are a couple of ways that you could go about trading and investing in that market. Hopefully that was helpful. We did a poll, and 65% of you guys, out of 78 votes, said the 3 Ps are helpful. Thank you guys very much for that. Lol, do you work for the DMV? That was funny. Thank you very much, John Doe. Rick4962 in chat said prayers, donated $50. Thank you so much, Yard Dog. I actually just saw your name yesterday on the HODL trophy, and I was thinking about you. Hope you are well, my friend. I hope you are well. Right now, it sits as a decoration in our office. Hi, Jeb and all. Maybe like the stream. Yes. Hit the like button if you have not already. Thank you guys so very much for that. I like the geopolitics and world economics to help decide on investments. I think it's important. Crypto can't become a currency. Too complicated. I think crypto can be a currency that's used by a lot of people, but I think it's going to have a difficult time replacing fiat at its own game. I think that cryptocurrency is going to end up replacing fiat in certain areas where fiat doesn't work the best. One of the areas that fiat does not work the best is long-term store of value. It is a terrible long-term store of value because if you hold it for 100 years, it's going to be worth almost nothing. If you're trying to, for example, and this is where Bitcoin really may thrive here in 10, 20 years after it stabilizes some. If you're trying to save money, if you're trying to save and have savings, then maybe you put some of that into Bitcoin. I wouldn't do that right now because you don't want your savings going down 75%. While it's down 75%, you need a new roof, right? Wouldn't do that right now. But 10, 20 years from now, I could see that being a use case for it when it stabilizes and it's moving up or down 3% every single month, a little bit like the stock market. I could see that because the reason that you get into Bitcoin is the lack of drop due to inflation. And again, remember, the other major reason is because of its transactability, that superconductive nature of Bitcoin. I like that last name connotation part. Yeah, I mean, think about it. When somebody says, I'm going over to the McAfee's, that's our name. When somebody says they're going over to the McAfee's, I want that to be something that means something pleasant. I don't want that to come with the connotation of, oh man, their house is a wreck, or oh man, their house is dirty, or oh man, they've got no money, or oh man, their marriage is a wreck. I want that to be, man, those people have an amazing marriage, they've got an amazing relationship with their kids, they've got a clean house, they are on top of their finances, they are generous, they love people, they love the Lord, they are serious about their walk with the Lord, they have business and they're able to educate people, and they're intelligent and they're wise and they're strong and they take care of people. That's the connotation I want people to hear when they hear my name, my last name, my wife's last name, because obviously she married me, and my children's last name. I want there to be a certain connotation. When you hear that name, you think of something. It's branding. If you want to change your personal brand, I'm not talking about your Instagram feed where you post a bunch of pictures with cars that you are not you, but some people rent and they say, oh, look at me in my fancy car. They pay $1,500 for one day in a Lambo, and they're going to be posting pictures of that Lambo for the next 3 years to make themselves $20,000 because people think they're rich. And they made $1,500 that month. They put all of it towards the Lambo, and they ate out of a trash can because that's how they were going to make money. That is fake. I'm not talking about that kind of personal brand. I'm talking about your name. What does your name mean? Does it mean anger and wrath? Does it mean bitterness and rage? Or does it mean hope? Does it mean truth? Does it mean integrity? In some areas, has it meant something in the past? And you've got to go and clear that up. You know, one of the things I want to teach you guys about financial sovereignty is getting out of debt. But there's two kinds of debt. There's multiple kinds of debt, but there's two big kinds of debt. There's financial debt, and the borrower is slave to the lender. But there's also a spiritual debt. The Bible says if you're bringing a gift before the altar and you remember that you have something against your brother, go and be reconciled to him and then come back and give your gift. If you have a debt because of something that you have done wrong, then square that. Clear that up. Apologize. Repent where you need to. If it's a situation that's dangerous, I was talking to somebody the other day, and he's saying like, "Man, I'm trying to straighten my life up. He just came to Christ. I walked with him to Christ. I shared the gospel with him, and he came to the Lord, and I watched him get baptized. It was beautiful." About 2 months ago, and he told me, because now he's trying to walk with the Lord, and he told me about how he's trying to get rid of these negative relationships from his past, where there's been, different things that he's done. I'll be extremely vague just in case somebody somehow guessed who I'm talking about. I don't think you will. It's nobody you know. But he's saying, I'm trying to get this stuff off of me. I want to get these people that might be dangerous away from me. I want to these things I've done wrong. I want to just get this behind me. I want to be free of the sin debt in my life. And so I think about that, and I think part of financial sovereignty is, yes, being out of financial debt, but it's also being out of spiritual debt. Go and be reconciled to your brother if you can. There's only so much we can do. But yeah, I want to help you guys get out of debt. And I want you guys to have a name that means something beneficial. And so to do that, I'm going to do something very simple. I am going to go straight to the Word, and I'm going to see the instruction manual for how to use finance in life that I was given by the guy that created it in the first place. And I'm going to read it, and I'm going to do that, and I'm going to see what happens. Because I've done that half-heartedly before in the past, and it didn't work out for me. I thought, wonder why that didn't work out for me. Oh, probably because I didn't follow that. Well, I didn't really do that very well. Oh, well, I wanted to do that, but I didn't do that part. Man. Oh, but I did that, and it worked. Oh, I tried that. That worked. That was great. And so I think, I'm going to just try the whole thing. That's what I'm going to do. And so we'll see where it goes. We'll see where it goes. Ultimately, any of my faults are my own. Hope you guys have enjoyed the stream. Really appreciate the donation, Rick. Make sure to hit the like button if you haven't already. Make sure to subscribe to the channel if you haven't already, and sign up for Club DeFi's Principles of Technical Analysis. You can go and learn more about technical analysis, and also make sure to go and sign up for Lux Algo so that you can learn more, so you can have that as a tool in your arsenal when you're trading and investing. I really do appreciate all of you guys for tuning in. I am going to wrap it out, but before I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling.